Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me will be Aisha Faridian. For now, the market has made a swift recovery. So the Nifty just managed to move into the green a few minutes ago. It's just around the 24,400 mark. Having said that, the Bank Nifty continues to be under pressure. And overall, if you look at the market mood right now, it is soft, but definitely much off the lowest point of the trading session. What's really reacting today is Axis Bank. It's down 6% post the week show and the big miss on the earnings front. So that stock is definitely coming under pressure. And talking about the earnings weakness, Nestle is not too far behind. A very dismal picture as far as the volume is concerned versus the expectation. So that stock is under pressure. What's charging along is clearly Tata Motors. So a 6% move coming in after Nomura upgraded that stock to a buy now. So that stock is doing quite well for itself at the highest point of the trading session. SBI Life 2, which is a result reaction, is also fairly active. From the broader markets, talking about result reaction, Jyoti Labs, that stock has managed to see an upswing of almost 11% as we speak. You also have Godfrey Phillips, which is charged up. Remember when there was no incremental negative news from the budget on tobacco, ITC had moved, but there wasn't a big move on Godfrey Phillips. It's catching up today off the highest point, but nonetheless holding up in the green. And we're watching out for some of the energy names, when Oil India and ONGC. Some of these names deserve mention. So overall, it's a decent set that we have at our hands. Given the fact it's a day of the monthly options expiry, we're holding up quite okay. Let me welcome on board our guests to talk to us about what they make of the market mood. Sandeep Sabharwal, Kunal Bothra join us on the show right now. Sandeep, hi. Good afternoon. What do you make of the market mood right now? Seems like every dip is clearly getting bought into. Whatever you throw at the market right now, it's not in a mood to settle down.
Yeah, Nisha. So the scenario we are seeing today is that globally, as expected, there's the start of a global corrective move, and we've seen significant corrections in many Western as well as Asian markets. Indian markets have held up till now, driven by largely very strong domestic flows and cash positions with domestic institutions, I think, who are coming in to buy at every lower level. But then risks remain. So I think at this market level, if the markets don't correct, then the risks in terms of valuations remain, because if we look at the overall result delivery, and results have been okayish. Like there have been some companies which have done well, there have been some companies which have not done well. So on a whole, the this quarter has been more about somewhat lower than expectation results. So tough to make a case for markets to go up from here unless and until they give up some gains.
Surprising though in today's market is that I guess the morning weakness was all thanks to the global cues. So, mind you, Asia has had quite a bloodbath actually. Japan fell about 3.25% on close. Korea was down almost 2%. Hong Kong was down near about 300 odd points, and Shanghai as well shaved off about 0.5%. Europe as well has started off on a weak footing, and as we speak, the US futures are not really staging a meaningful comeback. I think our markets are the standalone case where, Sandeep, any weakness is getting bought into. But before that, let me get Kunal in to talk about this kind of recovery and whether it's going to sustain, Kunal.
Well, it's a very good market. I think
Yeah.
if you look at this global handover and the kind of weakness across the emerging markets, I think we take it with both hands down. Nifty down by 17, 18 points just, and I think even if we close at 24,400 levels, I think that would be victory bulls. The good part about the markets over the last 2 days, even though the indices has been drifting lower, is that the market breadth has opened up. So initially what happens is if the market starts to get into a corrective phase, the market breadth tend to deteriorate further. But this time around, it's a different kind of a market trend where you've seen mid caps and small caps and few tier to large cap names, individual sectors. They're still holding on to their gains which they've accumulated over the previous couple of trading sessions, and some of them have managed to build further. So I think that's a good sign that stocks are still seeing follow through up move for themselves, even where the indices and the global markets are showing signs of weakness. But I would still largely believe that we may not see a major breakout or a major revival on the indices, at least looking at the way the global markets are panning out. I would actually expect the Nifty to drift lower, maybe 24,000 levels could be broken over the next 1 to 2 weeks. So I would probably expect the index to drift lower. But looking at the last 2 days of market action, I think it's more to do with stock specific and the overall market breadth.
Sandeep, is it a given? Do not put fresh money to work at these levels, regardless of whatever sector in the market?
The sectoral moves or opportunities could come in the result season. For example, if there is some significant revival or margin improvement coming in some particular sector, then those could present themselves as an opportunity because it's a big market now. There's a lot of liquidity floating around. So wherever we can see positive surprises or valuation somewhat being the comfort zone, I think those could still be bought as the result season plays out over the next few weeks. But on an overall basis, it's time to be cautious. And it's also that if the markets end up correcting 5-7%, then and in a short period of time, then in general we see that the broader markets, all the stocks tend to also correct along with that.
Taken. Just wanted to highlight Mahindra Holidays. In the last few minutes, the stock has reacted, and it's reacted because earnings are out. But I'm just actually going through the numbers. It does not look impressive to me at all. The revenue from operations has actually dipped to 652 crores versus 800 crores, which was their last quarter. And if you compare it to last year, yes, there is a jump up because last year this number was around 615 crores. But on the profitability front is where I think there is a major uptick, at least on a year-on-year basis. The profitability has come in at around 5.9 crore right now versus just less than 1 crore. It was pretty much actually break even in the year gone by, though last quarter was very, very strong. Last quarter they had a profitability of 82 crores on the bottom line, which has come to around 5 crores this quarter. Yes, it's been a weaker quarter because of the heat wave. There's a lack of wedding season as well. So all of that factors were at play, but clearly it seems like it's managed to beat the street expectations because that stock is reacting. Kunal, on Mahindra Holidays, would you have a recommendation? And Tata Motors, of course, the biggest gainer on the street because Nomura has gone ahead and upgraded the counter to a buy right now. Would you also be a buyer on Tata Motors?
Well, yeah, I think Mahindra Holidays first, I think, is a case of a breakout because the stock in the last 2-3 months was going through a drag. So it retested the 200 moving average end of the month of May, start of June, dragged itself around the 400 levels. But then post that, we saw the stock getting into a price volume breakout, up move. So and I think very recently, just about in the last 1 or 2 weeks, the stock had gone through a very similar kind of a mean reversion. But today's move indicates that the move has started off from 400 levels, from that sub 200 moving average for Mahindra Holidays, is a classic case of a trend in the making, and this could probably be a strong up move from current levels also. So my expectation is now that after this breakout move, the stock could probably head towards 575 to 580 mark as well. So potentially over the next 3 months to 6 months would have a 20% upside target for Mahindra Holidays from current levels. Tata Motors also, I think, is a classic case. So the stock over the last many years, 4-5 years specifically, has managed to form a classical uptrend. Even the last 6 months or so, the stock topped out at 1050-60 levels. That was the previous high for the stock. Dipped down towards 950 mark, 920 levels, and now back again about 1050 mark, which means it's ending that 6 months of consolidation. And historically, we've seen that over the last 3-4 years, that whenever the stock has ended this 6-month, 9-month kind of a consolidation, it's moved up higher by a margin of at least another 20% higher. So in that aspect, expecting targets of 1200 to 1250 on Tata Motors.
Okay, that's that on Tata Motors. A buy still after that 6% uptick too. We're going to take a very quick break, come right back. We'll continue our market discussion with Sandeep Sabharwal on the fundamentals, Kunal Potra on the charts. Back with closing trades right here in ET now. Let's just revisit what the closing trades are up to. While it's a good day for SBI Life, for Tata Motors, ONGC, L&T posted its numbers. Kotak, HDFC Bank as well are seeing a recovery, but that's not quite the case with Axis after its numbers. 6% lower still, hasn't seen any comeback. And even ICICI Bank, it's almost a tug of war between these two names on one end and Kotak and HDFC on the other. But Sandeep, at large, as a trend, what is it that you've made of some of these large private banking names and the kind of earnings that they've delivered? Nothing impressive. And for an HDFC, the stock has been under pressure ever since its update.
So I think key takeaways on a broad basis from everyone, all the banks, is that deposit growth is becoming tougher. And to that extent, we've seen HDFC Bank actually take up fixed deposit rates on a longer term horizons to even higher than what the other banks are offering. Secondly, most of the banks have said that the credit growth will trend towards deposit growth. So overall system credit growth, that means should be 12 to 13% vis-a-vis much higher over the last 2-3 years. And thirdly, the asset quality also seems to have peaked out, like from 0.23, 0.4% net NPAs. How lower can it go? So there could be some pressures coming through there. All of this combined, if you look at, unless and until fee income grows rapidly for many of these banks, we'll see that profit growth will become much more moderate than what they were over the last 2, 3 years. And I think that's the issue facing the banks right now. And it could, so this could be one segment of the market which could keep the overall market also subdued.
Taken, so that's a view coming in on some of the banking names. But Sandeep, what's the view on this entire Alcobev industry? Because that's getting a lot of attention. And we were just discussing a few days ago with Mr. Madhukela as well as to how the entire, market size in India is much, much, much lower than what, let's say, the other emerging economies or even China, etc., are at right now. And today, of course, the news coming in that Andhra Pradesh is now opening up their doors and they've reached out to companies like Radeko Khaitan. The management did confirm that to us that they have been reached out. So newer avenues opening up, you have the demographics which are favorable and now favorable policy as well.
Yeah, so I think on the overall basis, if you see the industry, the growth is still muted. If you look at what United Spirits did, so they are still indicating sort of lower single digit kind of growth. So I think this is an industry which is still not growing very rapidly, and the growth is muted. Although there was some margin improvement for United States, that also they indicated that it was temporary due to shift of some profits across quarters. But still, the markets have taken it quite positively. The valuations across the board are not very cheap. However, the entry barriers also are very high. So I think that's the reason why valuations continue to be high for some of the leading companies. So on an overall basis, I would think that tough to make a case for very big upsides.
And find out whether there is a case for further upside or not. But Sandeep, thanks as always for taking the time out. We'll let you go on that note. Let me welcome on board Alok Gupta, the MD at Allied Blenders and Distilleries, joining in on the show right now. Alok, hi, afternoon. Can you hear me clearly?
I can hear you loud and clear. Thank you for having me on the show.
Right. I just wanted to talk about, the kind of volume growth that you've seen for the fiscal so far, and it seems a little bit flat. Given the kind of guidance that you would like to set out for FY25 and what your peers have done, tell me what's the scalability that you foresee for this financial year?
For this financial year, the outlook that we have in the industry is like a single-digit growth. But within that, if you were to break up the industry between mass premium, P&A, and luxury, clearly the premiumization trend is extremely strong. We are seeing the premiumization trend across flavors. So for the FY25, we are planning to grow mid-double digit. Within that, our mass premium growth would be single digit. That's our flagship brand, Officer's Choice. But our focus on Officer's Choice is on sustaining and growing our gross margins. Over the last few quarters, a lot of work was done to get the gross margin in line with the P&A segment. So Officer's Choice at a large base of 20 million cases will grow at a single digit, high single digit, but will maintain and grow its gross margin. We have three very powerful brand in the P&A whiskey segment, which is Sterling Reserve, Iconic, and OC Blue. All three brands put together should get on to a mid to high double-digit market share. So we're extremely happy with how Iconic is performing. It's a brand that's less than 2-year-old, already has done 2.2 million cases and running at an annual run rate of almost 4+ million cases. And this year, we will see a lot of action from ABD. On the luxury side, we launched Zoya, which is our first luxury brand in the gin segment. But we're hopeful of launching a couple of more in this financial year. So the guidance for this year is double-digit growth, largely being led by P&A and luxury segment and expansion of the gross margins.
Question on the expansion of gross margins. By how much can you do that? Because of course the product mix is turning favorable, and I would believe that a lot of those cost pressures might have peaked already, because of course last few months have been very volatile with respect to raw material. How much expansion do you anticipate on the gross margins?
We are hopeful that it should be between 2.5% to about 3% expansion on our gross margin this year.
To reduce your interest cost pressures, because of course of the IPO proceeds you have repaid some of the debt. Could you talk to us about what could be the impact on profitability? How much is the interest cost saving there?
Post the IPO, we paid all of the debt, and this year itself we will see reduction in interest cost by over 50%, and then on year-on-year basis we'll see significant reduction on interest cost. So this year we're looking at almost about 90 to 100 crores reduction in our interest cost.
Right. The other thing I wanted to talk about, the fact that you did highlight some of your, flagship brands. What exactly do you think the product mix is going to look like in, say, the next financial year, given that right now 37% of your total volumes are coming in from the premium brands portfolio?
Right. So I think we are looking at it from two lenses. One is the P&A lens in terms of volume and value. So we do expect that in this financial year, our value share from P&A hopefully will be 50% of our total revenue. So that's going to be a significant jump in FY25. We're also seeing it from the luxury segment portfolio. So there is about 12 to 15 million cases right at the top where ABD did not have any presence in terms of product portfolio. Where we've launched Zoya, and we're looking at a couple of more launches in this financial year. So essentially, that's really how we are seeing our product mix. Focus on whiskey will continue because that is 65% of total consumption. But with Zoya and many other products that are in the pipeline, we'll also see ABD getting into non-whiskey segments.
Okay, thanks so much for that. And just before I let you go, last question that I have to ask you is with respect to this latest announcements coming in from Andhra Pradesh that they're opening up their doors and they've reached out to some of the companies as well for the supply. Could you talk to us about whether you are one of the parties which have been kind of called out for this supply or not? Do you right now have any presence in Andhra Pradesh? Would you be looking at expanding there?
We do have presence in Andhra Pradesh, but in the prior period, our volumes in Andhra Pradesh and our market share were more than 2x of what they currently are. So I think the invitation by the government to invite all recognized players is a good news for us indeed. We have a large manufacturing base. We do over 2 million cases in the state of Andhra Pradesh. So we have an established manufacturing base, established brand. But as the retail gets privatized, the brands will get back to their true potential. So if all goes well, from what we are hearing, we should see a significant growth in the state of Andhra Pradesh for ABD.
Mean increased competition for you because you were as it is then present in the state now with other players getting involved as well. Wouldn't that mean more competition and that you'll have to share the increased growth with others?
The competition mix will change considerably. That is important. The second and more important point is the retail currently is run by the government, right? So there is a great amount of influence on what gets sold to the customer. Once the retail gets opened up, which means it's private retail, then it's going to be about the strength of the brand. So at ABD, like I explained to you that what we currently sell is just 50% of what we used to sell earlier. The brand equity in the state of Andhra Pradesh is extremely strong. And as the retail gets privatized, I mean, we have no reason to believe that no reason to believe other than the fact that we will see significant growth.
You're confident that the brand will take you through the competition, and the bigger important news is that at least the market is opening up and expanding. Thanks so much for making time and speaking with us. Time now for a quick break. On the other side, we'll track the last 30 minutes of the trading session, day of the monthly expiry. Very important to track that. Welcome back. Well, two earnings has come in the last few minutes, and both are quite a bit of disappointment. Westlife is the one which has actually reported a decline in profits by as much as 88%. The profitability now stands at 4 crore versus 29 crore last year, even though the revenue is flat, and that tells you the kind of margin dilution that we have seen, sub 13% versus the 17% mark that we had seen last year. The other one is Laurus Labs, which is, surprise, is another disappointment because you have the net profit halving now. You have net profit at just 13 crore versus 25 crore last year. Revenue too is pretty much flat at 1195 crore. Margins have been held steady, but for Laurus Labs, we'll have to wait and see what the management commentary is, because every time there's a disappointment, the management does come out and perhaps talks about the fact how there's going to be recovery down the lane. They do maintain their guidance at times, and that turns the stock. So for now, that stock is down 1%, but there's a bigger cut right now on Westlife. But let me quickly take it across to Ansh. She's standing by to talk to us about the big price volume buzzers.
Tata Motors will be the first stock in focus as the stock has given a good breakout from that horizontal zone of around 1040 level. So it was intact from last 5 months and today it has given a good breakout from that level. In addition to this, the stock has also touched record high level with good volumes of over 3 times its average trading volume of last 20 session, indicating good participation in today's breakout. Apart from this, HPCL will also be in focus as the stock has given a breakout from its cup and handle chart pattern, touching 1 month high level along with good volumes. Apart from this, we are seeing that Indian oil has also given a good breakout from its 8 session consolidation pattern with volume of over 2 times its average volume of last 20 session. Lastly, BPCL will be in focus as the stock was actually stuck in a sideways trend for almost 30 sessions, and today it seems to have given a good breakout from that sideways pattern, so we may see some positivity in this stock. So keep an eye on these stocks.
Okay, keeping an eye on all those buzzers in trade as we would on some of the other stocks as well. In fact, let's take it across to Priyankar Biswas, India Analyst, Industrials, Logistics and Metals at BNP Paribas, joining in on the show right now to talk about the stocks that he's liking. Priyankar, hi, afternoon. Good to have you on the show. Let's start off with L&T because that's been an impressive set of performance. But given the kind of valuations that the stock is scoring at, what's your take on both the stock as well as, of course, the earnings visibility going forward?
Yeah, thanks for having me here. So on the L&T, I would say that the results were a surprise on the positive, I would say, especially on the order inflow fronts. So the domestic order inflows came flattish. So given that it was an election season, so we were kind of expecting some softness in the order inflows. So that clearly did not happen. And then the international orders have been quite strong. So something we have been focusing on for quite some time. And essentially what we see is that the margin guidances and revenue guidances all have been kind of retained. The only negative that we see is probably the somewhat bit of a cut in the prospect pipeline by around 10%. But having said that, it seems that the management is quite confident that they would deliver even 10% order inflow there and requires a 20 to 23% win rate. Probably that may also be achieved. So not an impossibility. So I think in that sense, given that post the budget, there has been some drop in the stock prices as well. So I think I would say that it is exactly quite expensive on that front when we look at the broader cap good space.
Expensive. Hi Priyanka, Anish also joining in the conversation. You recently initiated coverage on AI as well with a buy stance and overweight rating. Tell me what's the rationale there?
So AIA has been kind of a, you can say, a structural story. So essentially, that's more or less like you can say a shift from forged media that is used for mining industry to a better product that is high chrome grinding media. So essentially, what we are seeing is that AIA has been on an upward trend, especially in terms of the margins. They have been quite good as well. And in the past few quarters, we may have seen that there have been some volume pressures that they have not been able to deliver on the conversions. But given they had witnessed some favorable rulings, especially in Brazil, that anti-dumping duties have been removed, and possibly we can see that going forward in Canada. So we think that eventually, at some point, probably in FY26, the volumes comes back in quite a meaningful way, and once the volumes comes in, and the earnings also starts reflecting accordingly. We think there is a scope for significant up move in the stock in that sense.
Okay, and before I let you go, a quick word on JSW Infrastructure as well, because of course when the stock listed, it appeared quite cheap versus Adani Ports, but by any yardstick now, the valuations aren't really comfortable. What's your view on JSW Infrastructure? Because they've gone ahead and made a couple of acquisitions. Does it turn around the, the fate of the company as per you?
See, it's pretty easy to say that the valuations are expensive, just make it maybe just looking cursory at a EV by EBITDA angle. But I would say that not really the way to look at it, because if we see that it's a net cash company, so the amount of expansion that it can do is actually quite humongous. So we have actually calculated that while the management says they can do a 300 billion odd capex over the till FY30, they can probably do more closer to like a 500 billion, and kind of this acquisitions that are happening on the inland logistics side of things, including let's say the slurry pipeline sort of things, that should drive further growth, that is probably not getting factored in. So if we get something of an asset at a 18% plus ROC levels, then I think there is a substantial scope to even move up from here. So potentially in a range of 360 to 400 that's how I will say. I mean, recent slurry pipeline acquisition, we highlighted in our recent report that asset at least can make like an 18% to 21% ROCE. And why does it matter? Because when it starts up in FY28, in our estimate, that can be even more than 20% of the EBITDA there. So it is quite material as well. So going forward, more acquisitions happen like this, then we see a significant up move there as well.
And just a quick word, Priyankar, on the overall budget that we saw that just happened over the weekend, over the week, I beg your pardon. Were you a bit disappointed by the capex allocation because there wasn't a big jump there, whether it was road, railways, defense, it was pretty much status quo, as was the case in interim budget as well.
You are right. It's kind of exactly a mirror image of the interim budget. And I was expecting at least that because of the large RBI dividend that was there of more than 2 trillion, that close to, let's say, 0.6 to 1 trillion additional allocation probably could have been made for capex. So that was clearly lacking. So I would say that was a disappointment. And on top of that, for roads and railways, the growth has been kind of single digits. So these have been the heavy hitter sectors earlier. Now, having said that, one positive or silver lining that I see is the increased allocation to urban housing. So I am including the extra budgetary resources as well. So the total increased allocation is something like 0.37 trillion rupees. That's the only material positive that I see in the budget at the moment.
Priyanka, great to have you on the show. We'll let you go on that note. Thanks for taking the time out and joining in today. Adani green numbers as well, while the cash profits have seen an uptick of quite a fair bit. EBITDA margins have been largely flat, but you're seeing a fair amount of spike up in the stock. And I guess Adani Green is a story which is kind of those future stories. So that's what the market would be betting on. 1809 on the stock. We'll get you more details on how that quarter went by. But let's welcome on board Mayuresh Joshi as well and find out what he's making of the market right now. Mayuresh, hi, afternoon. I guess the aberration of the budget day post the cap gains tax changes clearly got digested, and today, as did global market weakness too.
Afternoon, Aisha. It seems to be the case. But as in 2018, I mean, I don't want to be a naysayer at this juncture, but the next few days are extremely critical in terms of how the broader markets might behave. And therefore, after the budget day, yes, over the last couple of days, the markets have gestated the supply very, very well. Have tried to probably get into their strides, the probable impact as far as STCG and LTCG is concerned. So there still remains question mark in terms of the real estate indexation benefits which have gone off. So yeah, so far I think the markets have taken it in a stride. Liquidity remains strong. And yes, I think the markets are now moving on post the budget and looking at earnings.
Okay, point taken. So that's the view right now. But for the market, it is Garden Reach, which is down almost 5%. You have KPIT Tech under pressure. On the gaining side, however, MMTC is doing quite well. Data Patterns is looking quite okay. And Adani Green, as I was just highlighting, that we were just highlighting with respect to the earnings that are out, is definitely showing a positive reaction. Mayuresh, what's the view on all of these energy names? HPCL, IOCL, even ONGC for that matter, have seen a very, very solid run-up. But from here on, one should book profit or continue just holding on?
Afternoon, Anisha. I think if you probably look at the oil and gas minister's statements a few days back before the budget, the sedimentary reserves that India has as far as crude is concerned, close to 621 million tons, and gas around 1100 billion cubic meters as well. So at this juncture, specifically in the oil and gas exploration space, we've just done 10% in terms of the reserve that India has. And therefore, the expectations of the minister is to probably take this to around 16% over the next few years. So there will be an accelerated investment push of close to $60 to $100 billion in that range, along with a part of allocation of around $8,000 to $9,000 rupees going into the seismic study as well. So there is a huge potential in terms of the exploratory optionalities that India has. If you probably look at the upstream companies, ONGC and Oil India as a case in point, the expectation in terms of the BPOED, as far as the oil production is concerned for ONGC, is expected to reach a new normal of around 12,000 BPOD barrels per oil equivalent per day, as well as the gas production expected to incrementally move forward as well. I think the biggest trigger here will be the OBL asset. What probably happens in terms of the throughput on the OVL asset is going to be extremely critical in terms of the overall volumes. And similarly for downstream companies, you're probably expected to see crude prices remaining far more stable in the coming few quarters, adjusting for the inventory gains stroke losses in this quarter or two. The larger term trajectory or the longer term trajectory looks to be very, very stable, which means both the pipeline business as well as expectations of at some point China coming back, leading to a recovery in the downstream business is something that the street is probably looking at. Therefore, I think this space looks very, very interesting. I think what we are probably looking at outside of ONGC is also something like a Celan exploration. Our own sense is the three fields that Celan has, specifically Bakrol, Karjisan, and Lohar. There has been a significant throughput that can get achieved in the next couple of years as wells have got drilled. And therefore, Bokral and Karjisan, with two more wells expected to get drilled and added to the contribution, should add significantly. They've got a merger going through in terms of the Antilopus merger. And therefore, I think the cash flow should remain strong around a very, very stable 2% dividend yield. Dividend yield remains extremely strong for most players in this segment. We remain positive on the energy space as
well. Okay, Mayuri, stay with us. Lots more to talk about, but let's try and pencil in what we're anticipating from some of the key earnings. And you've got Shriram Finance, which is slated for its numbers. So let's take it across to Snehi and try and understand what the ET Now poll is penciling in. Okay. Snehi, if you can hear me, tell us what is it that we can expect from the Q1 numbers from Shriram?
Yes, so largely a good set of numbers expected this time around from Shriram Finance, newest addition to the Nifty 50 pack. Interest income is being seen at 9,513 crore rupees versus 7,911 crores, which is up 20.3%. Net interest income, if I talk about that metric, NII, is expected to rise by 28.2% at 5,385 crores compared to 4,200 crores this time last year. PPOP also, which is the operational profit, is expected to go up by 27% at 3,968 crores, and net profit is being penciled in at 2,021 crore rupees versus 1,675 crores, which is a healthy uptick of almost 21% coming in on a year-on-year basis. Now, if I take a look at some ratios or some metrics sequentially, let's talk about NIMs first. NIMs are expected to be slightly pressured on a sequential basis, coming in with a slight decline or rather flat. ROA is being seen at 3.29 times versus 3.21 times. ROE is being seen at 16.6 times versus 15.9 times. So some healthy expansion being seen on the return to equity front. Provisions, however, are being seen slightly lower at 8.2% sequentially. So that's also another positive coming in at 1,157 crores versus 1,261 crores this time in the previous quarter. Now, the key expectations that the street is largely penciling in for Shriram Finance disbursements are being seen at 36,500 crore rupees. Credit costs are expected to largely remain stable sequentially at 2.3%. AUM and advances are expected to grow anywhere between that 19 and 20% year on year, and margins are expected to be slightly pressured, like I told you, on the NIMs front. What are the key factors to watch out for this time? Update on the cross-sell opportunities amongst the vehicle and retail segment customers is going to be key to watch out for. The company's strategy regarding loan products and vehicle loans, also another important factor. Growth in CVs as well as retail segment, and the asset quality when it comes to two-wheelers and personal loans will be important to watch out for. But well, yes, largely a healthy set of numbers being penciled in for Shriram Finance.
Okay, so that's the word coming in as far as Shriram Finance is concerned. But you have Laurus Labs, which is recovering quite smartly right now, and that's because the management has maintained their FY25 outlook. It was a very disappointing set, at least on the profitability front. So that's why when the first tick reaction was there after the earnings, there was a sharp downtick. But the stock not only has recovered all of that, it's actually moved into the green right now, because the commentary is something which is fairly positive, though of course we'll have to see whether the street believes that and takes notice of that or not. Mayuresh, what's your view on a couple of these pharma names, the likes of Loris? Even Cipla comes out with earnings and we're watching out for that. But any top bets within pharma?
So I think we like a couple of names, Anisha. I think Natco Pharma is something that we continue liking, and a clear disclaimer, we hold both the stocks that I'm going to discuss in our domestic as well as global portfolios. Obviously, the branded generics segment is doing exceptionally well for Natco and is continued to perform well over the next few quarters as well. They've got a very strong pipeline in terms of the FTFs and the ANDAs that are expected to get monetized over the next few quarters as well. So I think they will be maintaining the flow as far as new launches is concerned, leading to a very healthy top line. And because these new launches come with exclusivity in some cases and pricing in their favor, margins are expected to remain at elevated levels for Natco. So I think earnings, the EPS rating, RS rating, institution holding that we see in Cancel, it fulfills most parameters. This is one stock that we continue to like. The other stock is Morphin Labs within the mid-cap pharma space. Our take is that the numbers, specifically in terms of their medical product division, specifically when it comes to their glucometers and their BP monitors, are expected to continue doing well. The management sounds very, very optimistic post their Q4 numbers. There can be a very healthy growth in the medical product segment. And as the medical product sales grow, I think the strip sales compound in even a greater fashion, which creates a huge kind of an annuity business as far as this line is concerned. They've got very strong APIs, 6 APIs, which are very, very strong and lead to cash flows and more expected in the next few quarters. So management is very, very hopeful of a double-digit earnings growth expected to come through, leading to better numbers on the bottom line as well. So Morphin and Natco is something that we continue liking. Cipla and Dr. Reddy's, as a clear disclaimer, is something we continue holding in our global portfolios.
Right, okay, Mayur, stay with us. Let me, in fact, quickly take it across to Srishti as well, find out, since we're on the subject of pharma, what to expect from Cipla's earnings.
So, well, we are expecting a decent set from Cipla this time around, because generally Q1 is a strong quarter for Cipla, and this time we are expecting the margins to be quite stagnant at 24.1%. And if we see that number on a YY basis, then though there could be an improvement of some basis point. Onto the revenue figure, we are expecting a jump of 6.5% on a YY basis, while the EBITDA can grow around 9%. 1,623 crores is our expectation. And lastly, onto the profit figure, 1,071 crores is what we are expecting. Now let's understand that what factors will be at play for Cipla's growth this time. So for India growth, we are expecting a single-digit growth for the India business this time around, while for the US business, that's expected to be flat on a quarter-on-quarter basis, but we can see a decent number that will be on the back of sales aided by their commercialized product as well as market share gain in some of their key products. Even the South Africa market is also expected to grow 7% on a YY basis. So all in all, a decent set expected from Cipla. As we can see that the pharma industry is all in flavor as well. So all eyes on Cipla, and indeed we will be watching out for the guidance by the management commentary, what sort of a guidance they have for the full year, whether they stick to their earlier guidance or not, as well as we'll also watch out for the commentary on the site transfer for some of their key products is one of the other key monitorables. So a decent set expected from Cipla, all eyes on that.
Okay, that's the expectation from Cipla, but time now to put the spotlight on Tech Mahindra, because the earnings will be out post-market today itself. We're expecting that the constant currency revenue is expected to grow around 0.3 to 0.5%. Dollar revenue is seen around $1,550 million, which is pretty much flat on a sequential basis. Margins, the expectations are fairly wide, to be honest, right from 7.7 to 8.8%, and that compares with 7.4% that we had seen in the quarter gone by. Profitability, that's the reason, is looking to be very solid with a growth of 30% on a sequential basis, but last quarter there were some one-offs impacting the company's bottom line as well. This time we're expecting deal wins will be somewhere between $500 to $600 million, but more importantly, one would watch out for the management commentary, because they had come out with the FY27 vision. Whether they're on track to achieving that, has the demand environment changed in any way? Those are the big things that we're watching out for as far as Tech Mahindra is concerned. But back to the markets and seeing what's happening in the last few minutes, because it's the day of the expiry. Kunal, any specific trends that you're watching out for, or any BTSC trades?
So yeah, two buy calls which I would suggest at current levels. The first one is Zydus Life. That's a chart which is giving a breakout about the 1190, 1200 levels. Looks very attractive in terms of the short-term momentum play, the way the stock has trended in the last couple of days, as well as the comeback from its 50-day moving average. So on the back of it, I would expect 1280 as a near-term target for ZS Life, and stop loss could be kept at 1160 mark. And the insurance stocks are the ones which are looking very attractive. HDFC Life is one of the stocks which we discussed in the morning as well. The stock confirming a breakout yet again above the previous levels of 665, 670. So would suggest a buy with a positional target of 750, stop loss at 655.
Kunal, the other thing I wanted to analyze and away from the equity markets is what you're foreseeing now as a trend for both gold and silver, considering you tracked that as well. And on budget day, you did have a little bit of aberration combined both these metals.
So yeah, the charts on the dollar prices for gold and silver, they are still going into a broad consolidation. It's not too much of negativity. Only the rupee-wise chart that's got adjusted because of the, I think that 9% cut, the customs duty, 9% cut in the customs duty. So I think from 74,000, I think we straight fell to 68,500 of on the gold prices on a single day. But I think other than that, we are still, I think, at 2380, 2400, if I'm not wrong, on the dollar prices for gold. We're still hanging on to those levels. My sense is that in terms of dollar prices, we could be looking at 2500 to 2550 as well as a potential breakout. So in terms of the price adjusted, we could probably come back towards 75 to 80,000 mark for gold prices in the next 12 months or so.
Okay, so that's the view coming in as far as gold and silver is concerned. But for the markets, we're holding okay. We are not moving into the green very swiftly, but just just a few points away from that mark. Adani Green has managed to inch up quite a bit after those earnings, and Loris Labs is still reacting to the kind of commentary coming in. Westlife too has managed to recover a little bit from that initial downtick that we had seen. Metals as a pack, however, is under pressure. Remember, my colleague Aishwarya was talking about the latest Supreme Court ruling which has come in. In fact, we can take it across to her to try and get an understanding as to what it really means in terms of these levies coming in, whether it's going to be prospective or retrospective in nature. Aishwarya, what are the key details here?
Well, a Supreme Court 9-judge constitutional bench today held an 8-1 majority that states have the power to tax on mineral rights and the Union Law Mines and Minerals Development Act 1957. That does not limit such power of the states is what they have ruled. What they've also clarified is that royalty is not in the nature of tax, so both of them should be charged separately. Of course, royalty is part of the lease when the agreement is made, and taxation will be a separate aspect is what the Supreme Court has said. It has upheld the states to tax mineral lands. Of course, one of them did have a dissenting opinion on this case. In the past also, if we talk about judgments in the mining cases or royalty and taxation cases, in the past there have been companies associated with it such as Kesoram Industries, India Cements, which have got a few of contrary opinions or a dissenting opinion in that matter. But this particular case is a historic one for the mines as well as minerals industry, and today's judgment will of course benefit mineral-rich states such as Jharkhand, Odisha, as well as Karnataka and few other states as well, where mining is one of the big revenue aspects for the states. But as much as it is good news for the states, it may be bad news for mining companies. So we'll see how the stocks in these particular space move after this judgment has taken place.
Right, okay, that's the take coming in on what the Supreme Court judgment could mean for mining companies. In the meantime, let's just take stock of how we're closing in for the day. While a large part of the global damage is out of the way and we're closing in absolutely flat, it's not an across-the-board move, clearly. So Axis still goes home with a 5% cut. Tata Steel, Shriram, ICICI Bank down about almost 2%. There's Titan as well, which has seen a bit of a profit taking after that huge move that it saw on budget day. IndusInd Bank, LTIM, JSW Steel, Tata Consumer, Hindalco, these are some of the names, even ITC for that matter, that's down about almost 0.6%, and so is Unilever. Kunal, is that the trend that you foresee, that you're not going to see a meaningful move when it comes to, or rather consistent, sustainable move when it comes to FMCG? And are we going to see these sporadic up and down days?
No, I believe that there's a bigger trend in the making, Aisha, because in the last 2 months, we've seen many of these stocks doing exceptionally well. So, I think end of the month of May, start of June, HUL was almost at 2200 mark, 2250 levels. And now the stock is I think, few percentage points away from coming back to a lifetime high levels, and I think that's a phenomenal comeback for a stock like HUL. Same is the case with the likes of Britannia, Dabur, Godrej Consumers, Tata Consumers. Many of these stocks have come back from their multi-week, multi-year lows towards a breakout, potentially from their respective 52-week highs or lifetime highs, as the case may be. So I believe that there's a stronger trend in the making. Yes, because of the tilt of the market, which we typically get into. So if the market gets into a sharp corrective phase, we see defensives and FMCG stocks managing to outperform. And I think few odd days you see these stocks consolidating. But I think as a thematic move from here, I would believe that they are classical buy on dips even at current levels. And for someone who's having a time frame of 6 months, 1 year, I think they could still be looking at a further 20% kind of an upside into these FMCG stocks from current levels also.
Okay, so that's the view coming in as far as FMCG stocks are concerned. But just 1 minute left for the trading session to end. So on that note, Mayuresh and Kunal, we let you go. Thanks so much for making time and speaking with us. We're ending in the red, but just mildly. So we'll see how the adjusted numbers really shape up. But for now, it is pretty much a flat closing. So just around the green line, 24,415 for the index. The advanced decline ratio is also pretty much even, Stephen. A smidge of a tilt towards the advances. Sensex is mildly in the red right now, though a bigger cut clearly on Bank Nifty. It's almost down 0.9% with the pressure coming in from Axis Bank alone. In fact, the ICICI Bank stock too did not really do much. It's down about 2% for the day. Nestle as well ended in the red with the kind of volume disappointment that we saw, and some of the metal names were coming under pressure on account of that Supreme Court ruling. So Tata Steel and NMDC, all of these names were down and out. What held out was clearly Tata Motors, so 6% gain after Nomura upgraded the stock. You also had the energy names in focus. So BPCL, which is just a result reaction by the end of the day, ONGC, HPCL, BPCL, IOCL, they were all fairly active. Crude, of course, has slipped to the level of almost $81 to the barrel, and the gross margin or the gross refining margins have actually perked up. So a bit of a reaction across the board. Result reaction even for L&T and SBI Life, because both of these stocks are holding out in the green by the end of the trading session. And if you're looking at the series of overall July as well, it's been a close which is at least favoring the bulls by the end of it, with a bit of a green close coming in right now. With that, it's a wrap on this edition of Closing Trades. Thanks so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.